Number one question I'm getting today is, are we in a housing bubble that is just waiting to pop? I decided to do this video and share some information with you to show you where we've been historically, where we are currently, and where we're headed. Here you go. All right, let's jump right in. So this graph is demonstrating home appreciation from 1945 to 2021. We've seen a steady incline. Homes are going up at a pretty good rate, except for 2008. So what happened in 2008? I'm here to share with you two big reasons of why we saw such a dramatic decrease in home values in 2008. One was loose lending. They were handing out loans to everyone. And a lot of them were unqualified buyers. They weren't verifying employment, income. They were accepting borrowers that had lower credit scores or high debt to income ratios. They were creating these different loan programs to make it easier for borrowers to borrow and maybe not explaining how they would change. So a lot of those people ended up not being able to afford their mortgage payment, therefore having to lose the home. Along with that is also those people were also doing cash out refis. They were taking money out, going shopping, going on a vacation, maybe even doing some home improvements, but they couldn't afford that mortgage. So those were the two reasons why 2008 happened. And I'm going to show you some reasons why we're not headed in that direction. So it's important to share that last slide with you to show you that historically 2008 was the only time that we've seen that big of a drop in home prices. Another concern that's come up is a lot of talk about what we're doing coming out of COVID, because during that time there was the forbearance that was offered as a tool for homeowners to kind of weather the storm, so they didn't have to pay their mortgage payments. Everybody was kind of wondering what's going to happen coming out of that. Are people going to have to foreclose on their homes because they can't get caught up? Well, what this graph shows is we are trending downward with the amount of home loans that are still in forbearance. As of the most recent information, 690,000 homes are still in forbearance, which is much less than where we were in May 2020. So a recent statistic shows that 92% of people that entered into forbearance have come out of it. And those that have come out of it, you can see here is a picture of how they were able to come out of it. So 37%, the green area, is where they were paid in full. So those might be the people that took the forbearance tool and used it more as an insurance policy because they weren't sure what was going to happen. They ended up not needing it and they were able to pay it back in full to become current. 44.6%, the blue shaded area, went through some kind of work to work out with the bank. So either they had a modification, a rate or term refinance, or a deferral, and they tacked it onto the back. So 4 out of 5 people either went through a modification or paid it in full. Now that's very positive. That's a very positive sign. Now there are 18% that are still in some sort of trouble. They may have a plan in place. They may not have tried to get a plan, but the bottom line is, as you talk about crash, this is not going to be a factor because people have options today. If they've been negatively affected by the pandemic and you sell your home, the appreciation that you've seen over the last couple of years, pay a commission, put some money in your pocket, and hopefully that gets you to the other side of the crisis that you and your family may be experiencing. Okay, so two very important things to understand. The housing crisis of 2008, which was from loose lending, and the forbearance situation that we've seen coming out of COVID. So now that we've kind of talked about that, I want to talk about how today is different, how we're not going to end up in the situation of 2008. So going back to that happened because of loose lending. The products that were offered had a lot more risk involved. Those products are no longer offered today or have stricter guidelines. 2, the borrower risk. So they were giving borrowers loans that couldn't qualify for those loans. Therefore, they'd have to default. Now the process is a lot more in depth. They look at everything, the credit score. The borrowers now are much more qualified than they were back in 2008. Okay, so now that I've shared with you, we are not in a market like we were back in 2008. I'd like to show you where we're headed. So as you can see here, property values are going to continue to rise by 9%. And the years following, they're going to continue to rise, not quite as high as we've seen in the past or as rapid as we've seen, but they're going to continue to increase. So those of you that might think maybe I'm going to wait to buy until the market cools off and prices come down, it's not looking like that's going to happen soon. All right, now that we've talked about what's going to happen with home values, they're going to continue to rise. What's going to happen with interest rates? Interest rates are going to continue to rise as well. As you can see here, Bill McBride with the Calculated Risk blog states that they're going to edge up close to 6%. As we've seen this year, we've seen them climb starting at around the low 3s, creeping up into the low 5s to mid 5s on a conventional 30-year fixed loan. So we're going to see those interest rates continue to rise. Now, there's a lot that goes into that. We don't know how high they're going to go or how quickly they're going to go. We have to keep an eye on inflation because long-term interest rates, inflation is their worst enemy. So the Fed has said they're going to work on that. So we'll have to keep an eye on it and see how much rates are going to increase if they're going to go over that 6%. Thanks you guys so much for hanging with me today and watching this video. I hope that I provided information that will help you understand what the current market is, where we're headed, and that we're not going back to the 2008 crisis. And we're not in a housing bubble that's going to pop. So as always, if you have any questions, I'm always here for you, anything real estate related or anything else. You guys have a wonderful day.